Good morning.
Good morning.
Hi, everybody.
Morning.
Good morning. Good morning.
Hi, good morning.
Good morning to you. How are you doing today?
I'm doing wonderful. Thank you for asking.
Awesome, awesome, awesome. Well, we have a really great speaker today talking about smart financial strategies for your small business. Gil Valadez from the Auxilia Asset Management Group. He'll be diving into some really important topics that I think apply to all aspects of you guys' venture. So please give him your questions, the attention. I think this will be a great session. And of course, if you have any questions about anything start of spring training related, just drop, a question in the chat or just email me directly. Perfect. I will hand it over to you now, Gil. If you think, Gil.
I am the founding partner of Auxilia Asset Management and a financial advisor by trade and certified financial planner by education. You've got my contact information. If you're taking notes today, please feel free to jot down the information that you see on that screen. I'd be happy to take any questions that you have. There is a chat box, so if you have questions throughout the presentation, please don't hesitate to drop them in there. It'll alert me that you've got a question in there. I would rather answer the questions as we go. That way we're kind of topic sensitive to whatever slides we may be on and discussing at that particular time. So please feel free to add anything in the chat. And as a result of today, if you decide, I've got some questions that I would rather not speak about publicly, and I've got some very personal questions about my business, and you'd like to ask me any questions, please feel free to give me a call either at the number that you see on the screen or send me an email or visit our website, and there's a link there as well to schedule a time if you have individual questions. So with that, let's get started with our topic of smart financial strategies for the small business. So my obligatory slide is the next one that I'm going to show you, which basically says, my opinions are not necessarily the opinion of the TV or the radio station. They're my opinions. So that's what you're going to be getting today. You'll decide at the end of today whether my opinions are worth listening to or not, and we'll see where we go from there. I'm going to try to spend time on the things that I think are going to make the most sense to you, and I try to put myself in your position. That if I was listening to this presentation, what would I want to hear about, and what would I not want to waste time on? And I got to tell you that the vast majority of our firm's clients are small business owners or people who were small business owners and transitioned out, either because they had a succession plan or they had an exit strategy or they just closed their shop, depending on what kind of a business they had. So we're very well versed in working with small business owners. So I hope to be able to share with you a lot of tried and true strategies that we've shared with our clients, and they've been able to put into good work. So let's talk about what the agenda is for today. So we're going to talk a little bit about understanding. You're already in a small business, right? That's the reason that you're on this call. So we're not going to spend a lot of time there. But we're going to talk about protecting your small business on ways that you can do that, the most common ways that our business owners are doing that. We're not going to spend a lot of time on life insurance, but I'm going to talk to you more about insurance that you may want to consider if you are a small business owner, especially if you're someone who's got like a startup company that you're hoping to bring on investors or other partners as you start to build your business. We're going to talk about retirement planning for a small business owner. We're going to talk about succession planning and talk about building a professional team. Now, you're not going to walk away today, nor is it the expectation that you'll walk away today as an expert in everything that we're talking about. My goal today is to give you some ideas to think about, These are topics to consider. Should I be talking to someone about this? Should I be putting a team together? If I have a team, then these are the kinds of questions that I need to be asking this team. That's really what I want to do. I want to arm you with the knowledge that you need to be able to make good, educated decisions and ask informed questions when you're dealing with the professional team that you put together. So let's go ahead and get started. First of all, let's talk about the small business landscape. You know, you all know this. First of all, I should really say congratulations on taking the leap of starting a small business. Not everyone has the guts to do what you have done. Most people, in fact, would rather be an employee rather than an employer, or even a small business that's starting as a sole proprietor. To take that responsibility on yourself is a huge, huge deal. Frankly, the backbone of the country is made up of people like you who've decided, you know what, I'm not just going to go work for somebody. I'm going to start my own company. Sometimes you're doing that while you're working for another company, right? And that's perfectly fine. So there's something in the chat right now. Let me go ahead and see what that is. And, oh, thank you, Karina, for adding that. Okay, so let's go ahead and get into the real meat of the program. And that is, first of all, when you decide to open up shop, what are the things that you should consider? One of the things, and you've already opened up your business, right? So you may have already gone through this, but if not, this is something that you may want to think about, is what is the structure that I really want for my business? And what I mean by this is what kind of an entity do I want to open my business in? And there's some real advantages to particular entities, which is why you want to consider them. Most people, when they first start their small business, started as a sole proprietorship. And that's just, okay, it's me, I'm starting a business, I'm going to give it a shot, let's see what happens. Pretty quickly, they find out, well, this is going to get a little more sophisticated. If you talk to anyone who's got a small business already, which all of you do because of the connection to SeatSpot, I'm sure you've been going through sessions that talk about, should I have a partnership? Should I have a limited partnership or an LLC? All of those, well, the partnership doesn't, but a limited partnership and an LLC would give you some liability protection. So one of the risks that a lot of us, when we first start our businesses, don't consider is what happens if something goes wrong? What happens if someone decides to sue my business? And because I'm the owner of the business, they're going to sue me. So what can I do to make sure that I'm protecting myself so that they don't take everything that I have? Frankly, even someone who has a business that is as simple, and I put that in quotes, as simple as owning real estate besides where they live. So let's say you own a rental home, right? Most of the time people say, okay, I just own the rental home, I bought it, it's in my name, etc. Well, what people don't realize is that if someone's living in that house or in that commercial property and they injure themselves and you're found to be liable for whatever reason, and they sue you, and that property is not in an LLC or in a limited partnership or in a corporation, then they can come after you personally for all of your own personal assets. It goes exactly the same way for your small business. You want to think about, do I have the right entity to protect myself? How much risk is there really, right? And then what's the best way for me to go about protecting myself? What most of our new small business owners do, or they elect to do, is to go with an LLC, a limited liability company. And what that does for them is it gives them just what it says, limited liability in the event that something goes wrong. Once a business starts to get more established, many of them decide to go to a C corporation where they're actually incorporated and they issue shares of their business, and they may own all the shares or they may own some of the shares, but it's a way to also help recruit people that when you're bringing people into your business, you can tell them, well, we're a C corporation. Right now, I own the 1 million shares of our company that we have. And if you start with us and you stay with us for X amount of time, you're going to own 10,000 shares of the 1 million shares. So it's a way for them to have skin in the game and something that you can do quite easily when you have an S corporation. I'm sorry, a C corporation. An S corporation works similarly, except there is no actual stock, but it does give you protection in the event that that you get sued. So these are just some thoughts that if you're taking notes, the question I would write down is, do I have the right entity for my business? And the person to talk to about that would be either an attorney or the person who's your bookkeeper or CPA that helps you with your taxes. They would be able to look at your business and say, in their opinion, this is what they would recommend that you have. So let's talk about, once we've developed and figured out what kind of an entity we want, let's talk about what's particularly important in looking at our business. And these are things that are quite often overlooked. And the reason is, I like to say it this way: you're so busy working in your business that you can't look outside and work on the business. And what I mean by that is, whether insurance is part of it, this says life insurance, but I'm talking about insurance in general, succession planning, retirement planning, and then putting that team together. So let's start talking about the insurance. We'll talk about that in just a minute. So let's talk about that. Let's talk about managing that business, right? Okay. So the question I would have for you is, are you starting this business because it's what you plan on doing for a living, or is this a hobby? And it just is easier for me to do it as a business. That's one of the first questions that I would ask. One other topic in the chat, excuse me one moment. Okay, the rental property being in an LLC. Yes, so definitely, I'm going to regress a little bit. Yeah, if you've got rental property, you definitely don't want to own that personally. You want to own that as an LLC. And if you have more than one rental property, depending on how many you have, or commercial properties, whatever it is that you own, you want to think about how much liability protection do I need? And it literally only costs you the cost of setting up the LLC, which is minimal relative to the liability that you can have. So thank you for that comment. Let's go back to managing the business. So what are we going to look at, and what are we really considering here? We're going to talk in the next couple of slides about what are the key issues. The slides say mistakes. By the way, I don't write the slides, but it says mistakes. We're not going to talk about mistakes. We're going to talk about things to be just aware of. But here are the considerations. Here's a couple of things that, if, again, taking notes, I would jot these down. Here's a question I would have for you. If you started your business, right, and it's anything more than a hobby, this is truly what you plan on making a living from, then here's my questions for you. There's 3 of them. Number 1, are you counting on your business to generate your retirement income? And what I mean by that is, are you going to still be working in your business or have ownership of your business when you reach retirement age? And you may be 30 years old listening to me and say, oh man, Gil, that's a really long time from now. I'm not really worried about that. Well, a question that often gets asked to me is, Gil, what's retirement age? Right? What's retirement age? And the retirement age is when you've got enough money generating an income for you, or sources of income for you, that you no longer actively have to go work. And if you are working, it's because you want to work rather than because you need to work, right? That's really retirement, but there is no age, right? It's whenever that happens. If it happens when you're 30, awesome. Chances are you're still going to do something, probably start another business, right? Or other businesses, or maybe you'll be someone who's going to help a lot of other people who are trying to start businesses because your business was so successful. But whatever it is, the question is, are you counting on your business to generate retirement income? And if you are, how is that going to work? And don't expect to have the answer to that, but how is that going to work? That's something that you may want to think about. The next question would be, could your business continue if you weren't there? Let's say that you were kidnapped. Doesn't have to be that dramatic, but it could be that you're injured, you're in a car accident, or fall ill for whatever the reason is, and you can't do what you do at work every day. And let's say you can't do it for a week or a month or a year. Would your business still survive? And if it would, how? And if it wouldn't, then what steps do you need to take to make sure that your business is going to be there? What would happen if you could not work in your business for a month or a few months? Would it go away? So think about that. The other question is, do you have some employees that are so important to your business that if they weren't there, your business would fail to be able to run as effectively as it does? So that's another question. That's question number 2. And then question number 3 is, what about your family? If you weren't here to be able to keep running your business, then what happens to your family? Are they counting on this income from this business? Does the income go away? That means that the business go away. That means the income goes away. That means their financial future goes away. I don't know, but it's questions that you may want to ask yourself. So those are really key, we think key questions that you want to ask. Again, I'm not here about giving you every single answer to every single question. I want to make sure that you've got the questions that you want to consider so that you can get answers for yourself when you're talking with the team that you'll put together. So let's talk about 10 of the most common areas that we want to make sure that we're focusing on. And these are, and some of them are frankly mistakes that we've seen clients make, right? One of them is, if you're a small business owner and you're starting to have money coming in and you're thinking, man, I've been busting my butt for so long to finally get this business going. I'm going to start taking, I'm going to take the money that I need, and I'm going to take the money that I want, right? So not only to pay for my needs, but also for what I want. At the very beginning, that's something that you may want to be very careful about. And the reason is, any dollar that you take out of that business is a dollar that is not there to keep the business going and to keep the business expanding. And depending on the type of business that you have, in order to have it become what you ultimately want it to become. Because there's, and I've seen this with personal clients who have decided, finally our business is going well. This was a married couple, we're taking a bunch of money out of it. And before you know it, the money that was needed for the business just isn't there because they've taken it all personally. So now either they have to reinvest that money, but chances are if they took the money themselves, they didn't take it and bank it, they took it and spent it. So now that money isn't there. And as a result, and I'm sure all of you learned when you were starting your small business, that one of the greatest risks to a small business is lack of capital, lack of money to keep you going during the thin times. So just be careful about how much money you take out of it. Another huge mistake that we see some people make is using business accounts for personal expenses. So remember how we said you want to have an LLC at least, probably, so that you can protect yourself in the event that your business gets sued? Well, here's the thing. If you're using business accounts for personal reasons, then what they call that is piercing the veil. So the veil between the LLC and you as a person, when you take money out of it, when you're using business money to pay for personal things, then you're considered, or could be considered, that you pierce the veil, which means that they could say, yeah, you made it an LLC, but you're not really treating it like that. You're really treating it like a sole proprietorship. So because of that, you're on the hook anyway, even though you thought you had the liability protection set up. Going back to the real estate idea, if you have an LLC and I'm your tenant, I should be paying rent to the LLC, not to you personally, by the way. Same idea, right? I don't want to be using business money for personal expenses. Third is not taking advantage of low interest rates and depreciation when it's available. So depreciation is something that your accountant will help you with. But an interesting thing that I've been talking with my clients that are business owners is they talk about the interest rates. And they say, I'm waiting for interest rates to come down. And I guess what I would share with you is, and I guess the question that I would ask you to jot down is, what's the risk that I'm putting my business in if I don't borrow the money today to do what I need to do? If I borrow the money a year from now or 2 years from now, did I add risk that was unnecessary? Keeping in mind that you may feel that interest rates are high today, but historically they are not. What we had was, a few years ago, we had historically low interest rates because of the pandemic and other reasons. But those were historically low. Right now, interest rates are pretty much normal interest rates. Can they come down? Do we expect them to come down? Yes. But do we know whether they're going to come down in 2025? We don't know. Are they going to come down in 2026? Probably. So the question again is not, are they going to come down? Because they probably will. But the question is, what damage am I doing to my business if I wait? Am I not taking advantage of an opportunity today because I'm waiting for money to be cheaper? And then you have to decide whether that's worth it or not, right? So that's something to consider. We talked already about having the right business structure. It erroneously here says having a success plan. Well, we all have a success plan. A succession plan is really the what you want to think about is what's going to happen to my business ultimately, right? Is this business that I'm going to have, and when I'm done working it, I'm just going to close the door, take the shingle down, and I'm done? Okay, then maybe that's what you're going to do. But the other part, equally as important, is do I have a tax plan? And that's something that you would think that you'd go to your CPA and say, hey, I need to put a tax plan together of how I'm going to generate my retirement out of my business. Well, CPAs don't do that. CPAs basically tell you what happened in the past. They deal with what happened in the past and put it together for you, rather than, now most of the time, some CPAs are exceptional, but most of the time they're not going to tell you this is what you should do in the future. And they're not going to put together a tax strategy for you. They're just going to implement the tax strategy or the lack of one that you may already have. The next one is using liquid funds to make illiquid purchases. So this is, I'll put it in personal context. Using money that you have in cash to buy a car, right? So now I've got money that's liquid that I can use for anything that I need, emergencies or whatever. And I'm going to use all that money to pay for my car. Let's say I buy a $50,000 truck. And I'm going to pay for, and I know some of you are like, $50,000 truck, where are you going to find that? I know they're very expensive. But let's say it's 50,000. But I buy that $50,000 truck, and now there's an emergency. I cannot spend that that truck. So I have to think about that. One of the places where this comes up quite a bit is, let's say that your business has real estate debt, and you're thinking, well, I want to pay off my building as fast as I can. Okay, I get that. But here's the thing. If you're putting liquid assets, cash, into your building, and then there's an emergency, you can't get that money out without borrowing it out and paying interest on that. So now you're taking money out of the business property and paying interest on it when in fact you had it in liquid cash. And the question, I guess, would be, what am I doing with my liquid cash? Is it in a regular checking or savings account? Or is it in a money market account or a high yield savings account? Something that has no minimum, pays interest of at least 4% right now. Right now, 4% is a very reasonable number. And it has no transaction fees and no fees of any kind associated with it. Those you can find. Now, if you go to your local financial institution that you do your work with, and they don't have something like that available, I'm going to give you something that you may want to jot down. It's bankrate.com. So Bankrate, now we're not endorsing Bankrate, it just happens to be one of the companies that does this. So if you go to bankrate.com and you go to money, you go to savings and then go to money market accounts, what it'll show you is a list of, go past the sponsored ones. The first couple are usually sponsored. After that, it shows you in order of the highest interest rate, what the money market accounts that are available to you, so that you can make sure that the money that you've got that's in cash is actually working as hard as it possibly can while still remaining in cash and being totally available in the event that there's an emergency or you need to reinvest that money into the business. So again, check with your current financial institution. If they don't have that, then you might want to check bankrate.com. Next one is not having a retirement plan. I guess I'm not so worried about a retirement plan as much as a retirement strategy. You may be, again, so busy just getting your business going and working on the business that you're not worrying about, Gil, yeah, I would love to have a retirement strategy if I knew my business was going to be around. Fair. That's a fair statement, right? But I guess I'm just saying, do you have a team of people together that are going to help you put that together when the time is right? So you may want to think about that. Do you have the right bookkeeping professional, i.e. do you have a CPA, someone who's helping you that knows what what is available, the depreciation we talked about earlier with whatever your business expenses might be. The more sophisticated your business becomes, the less likely it is H&R Block is who you want to have doing your taxes. Again, nothing wrong with H&R Block or individual tax preparers, but you want to make sure you've got someone who works with small businesses, and that's one of their specialties, because they're going to be able to help you better. And then one of the other things is trying to make tax or legal or financial decisions entirely on your own without putting that team together. And then finally, well, we talked about the insurance, and I guess I would just think about when it comes to the insurance stuff. You know, if something happened to me, does my family have any? Does this business still going to be here? Does my family still have it? Does my family have the ability to keep my business running? If I have a partner, think about this. Let's say that you and I are partners in your business, okay? And you and I know the business really well. That's why we're partners, okay? Your spouse or significant other, let's assume for a moment, does not know anything about the business, and my spouse does not know anything about the business. If I died, or if I got hurt and was no longer able to be in the business every day, right? Especially if I died, my wife would say, oh, well, I guess I'm your new partner. My wife's name is Teresa. She'd introduce herself and say, hi, I'm Teresa. I'm Gil's wife. He passed away. Welcome me to the team because I'm your new partner. Oh yeah, I don't know anything about your business. I don't know how to run the business, but I own half and I expect to get half of the profit. So thanks for letting me in the door. What a lot of folks do is they have what's called a buy-sell agreement. And what that means is that in the event that one of my partners becomes disabled or passes away, then there's a way that I can pay off their family, and now I own the entire business. So let's just stick with this for 1 second. Let's say that our business, we decide, is worth, if someone wrote us a check for $1 million, we would take it. And you and I are partners, equal 50-50 partners. Then what each of us would typically do is we would have a $500,000 policy, life insurance policy on each one of us. Super inexpensive term insurance is what we would have. You'd have 500,000, I'd have 500,000. In that scenario, I die, the business gets $500,000. My wife shows up at the door and you're like, thanks, but no thanks. Here's a check for 500,000 that you just got from the insurance company. And now you own 100% of the business. So think about that. Think about another thing. You and I are partners, same scenario. All of that goes through, but you handle one part of the business and I handle another part of the business. I'm gone now. Who's going to handle that other part of the business? You're going to have to find someone to hire. You may have to overpay to hire someone really fast that's really good to be able to do whatever it is that I was doing, because you don't want to impact your business. So you may want to have additional what they call key person insurance, so that if I pass away or you pass away, either one of us has, the business has money coming in from the insurance policy to go hire that person and maybe even overpay for that person, either for a short term or maybe indefinitely. So a lot of things to think about here. Again, that's why I started the whole session by saying you're not going to walk away with being an expert on everything here. We just want you to think about, boy, these are the questions that I want to be considering when I'm talking and putting together my team. So we talked about the insurance stuff. No need to go through that again. Let's talk a little bit about retirement planning. So there's some important things that have happened in the retirement planning field. One of them is through COVID, there was the Secure Act, and then there was Secure Act 2.0. And one of the things that happened is that if you're a small business and you have never had a retirement plan in place, by the way, this is even if you're a solo business. So if you're all by yourself, right? Doesn't matter whether you're by yourself or whether you have a bunch of employees. There are now some rules in place that will help you put a retirement plan together. And it's the retirement plan startup cost tax credit. And basically what it says is you can deduct 50% or $5,000 or up to $5,000 of whatever the costs are to set up your plan and to pay the fees for the first 3 years. So that's pretty amazing, is the idea that you could start a 401k plan for yourself or for your small group of people. Usually a small business doesn't do that because to set up a 401k sometimes can be expensive. Well, they're going to, you now have a tax credit of $5,000 to be used toward any of the fees over the first 3 years. And I can tell you that if you have a relatively small business under 20 people, that $5,000 is probably going to cover every fee that there is for the first 3 years. And then the idea is now the fees that are coming up every year, the participants pay for that. They pay for it by taking a little bit out of their retirement plan, depending on the pro rata amount relative to the total that they might have. But the bottom line is, this is something that if you've thought that I don't have a retirement plan because I'm only one person, you don't have to think that way. There's opportunities out there. If you thought I don't have a retirement plan for my company because it's going to be way too expensive, rethink that, because you may have some money that's on the table that's available to you. Again, CPA, financial advisor is perfect person to talk to about that. There's also thoughts that if you are a small business owner and are treating yourself as a 1099 employee, some people do that. And if you do, there's special retirement plans for you. They're called SEPs, Simplified Employee Pensions. These are specifically for self-employed people or people that have 1099 income. So that's something that you may want to consider. And then there's other IRAs, there's Roth IRAs. And another question that you may want to jot down for yourself is, if you were contributing to a 401k or an IRA, then my question is, are you contributing pre-tax or are you contributing after tax? So think about when you're looking at your retirement, and it's never too early to start. It's amazing if you look at the numbers. It's amazing on what a difference it makes to start now versus 10 years from now, and how much more money you'll have to put in if you start 10 years from now than if you started today, to get the same amount of money when you're 60, 65, 67, whatever that is. So think about that. Think about putting together a retirement plan, at least so that you have an idea of, this is where I'd like to go. It's kind of like thinking, one day I'd like to go to Europe and start and figure out how much money is it going to cost me to do that. I know I can't go to Europe this year, but maybe I can go in 3 years, and you start putting money away every month so that you have the money 3 years from now. Retirement planning is no different than that. But you got to have, number one, where you are today, kind of like the navigation system in the car or on your phone. You got to know where you are today, and you got to know where you want to go, and then you can put a plan together. And just like the navigation system in your car and your phone, every time you take a step or every time you drive a block, it's always recalculating, making sure you're on the right path, always checking to make sure that you're on track to reach your destination. A good strategy for retirement is going to do the exact same thing while still having the flexibility to be able to make changes if necessary. So again, when it comes to taking care of yourself, a lot of folks say, well, my plan is that I'm going to sell my business when I retire. And that's fine. You may decide to sell your business, but in the event that you don't or can't, right? Or a lot of folks say, well, one of my kids will take over my business. Well, which one? Now, I happen to be fortunate enough that my daughter, one of my daughters, is in the business with me. So fortunately, I have that succession plan. But she's only been with me for a year. Before that, my plan was different because I didn't know whether my daughter would get into it, right? And whether she would like it, and whether she would want to stick with it, and whether she would ever want to take over the family business, right? It's my business is no different than yours. So I had to take steps to make sure that my business was going to be able to be sold in the event that no one in my family wanted it. The question is, how easy is it for you to do that? Some businesses can do that very easily. Some businesses, you are the business. I have clients that are physicians and attorneys, and most of them, when they're done, right? They whatever money they've saved, whatever money they put away, but to sell their practice is just selling the patients, and there's no way to know, is that patient going to stay with the new physician? So there's no way to know, is X number of dollars of income going to be coming in to the new physician? So very, very difficult to do that. So the question you might want to ask yourself is, can I do this? Can I actually turn my business into retirement income by selling it? How easy would it be to do that? And by the way, if you're deciding that you're turning 60 and you want to retire at 61, so now I got to find a seller, and the reason is I want to sell fast, then someone's going to know that, and they're going to likely offer you less money for it. In addition to that, if you become disabled or can't actively work in your business, then someone's going to offer you a lot less money for that business than if you were actually working in it. And keep in mind that most of the time, because you develop your business, they're going to want you to stay with the business for some extended period of time after the sale as in a consultant role or whatever it might be to make sure that you're there. So everything that you see on the screen, I'm not going to spend time on all of it, but all of these are opportunities for you to think about, including whether you're contributing to a 401k or a Roth version of the 401k. I talked about the Secure Act 2.0 and the fact that they've made some really great opportunities available to all of us. There were some changes in 2.0. They said that now that if you have a part-time employee that works 500 hours a year, then you've got to make the 401k available to them. The reality is, my counsel to my clients is, well, why wouldn't you want everyone to have an opportunity to contribute money to it, especially in the first few years when most of the fees, if not all of them, are being paid for you? So it's very easy to take a look at that. In fact, if you are a sole business owner, and let's say for a minute that your business is just killing it, right? You're a sole practitioner, you're on your own. You don't need to have employees. If you do, they're 1099s, so you're the only employee. You can do a solo 401k and you can contribute to a 401k for yourself, not only your contribution, but then the company, right, that you own can match your contributions. So you by yourself, if you're under 50 years old, your limit is going to be $23,500. But the company can put in, you and the company together can put in a total of $70,000. So if your company is really killing it and you want to put money away, you can do that. The match is totally discretionary. The contribution you're making is totally discretionary. So if the time is right and you're confident that the money that you have on hand, right, is available to be put away for the future, then you may want to look at what kind of a retirement plan can I put together for my company. So from retirement planning, let's talk to succession planning. So here are some facts, right? There's a very small percentage of businesses that make it even to the second generation. Less than 1 out of 3 make it to the second generation, and even less make it to the third generation. And if that's reasonable, right? I mean, the chances of my kids liking what I like and having a passion for what it is that I'm doing is less, right? It's just unlikely. So, 1 out of, or 3 out of 10, 1 out of 3 might decide, yeah, I'm going to go ahead and take over the business. And by the way, the business is going to have to be running really, really well for your kids to want to take it over, right? No children want to take over a business that's kind of meandering around and maybe going to make it, maybe not, right? Most people aren't willing to do that. And then the likelihood of it going past that is even less. So the question is, then if I want to transfer it to the next generation, how am I going to do that? And how am I going to get money out of it? Right? How am I going to get paid if they're buying the business and saying, oh, by the way, half the profits you have to keep giving to me? They might be like, well, I don't know. Is that a really good deal? How much profit is there? And, is it worth doing this? Should you consider, this is an employee stock ownership plan, is if you are a C corporation and you've got a pretty good number of employees and you want your employees all to have skin in the game, meaning you want them to own a part of the business. So if you're an employee, you have an opportunity to own a part of the business by owning stock in the company as a C corporation. Could your company grow enough that you could actually make it public? Absolutely. My hope for all of you is that you're able to do that one day if that's what your desire is. Think about, if you're going to be thinking about passing your business on, where's the new money going to come from for that business? And if you're going to sell that business to a third party, not a relative, but you're going to sell it through a broker, then what are the costs going to be associated with that? Or is my option really going to be, like I said earlier, I'm going to close up the shop, I'm going to pull the shingle, and I'm done? Because really, my business is the service that I provide, and maybe even the services that my employees provide. Well, that's still a business that could keep going. It doesn't have to be liquidated. So it's a matter of looking at your individual situation and trying to figure out, what are the things that I should really be thinking about when it comes to to what's going to happen with my business ultimately. So finally, as we start to wrap up, want to think about having a really long-term plan. You know, are you going to be in your business and you're going to be running your business forever into the future? Or is this something that you're doing and then you're going to be moving on to something else and you're going to be handing it off to someone else who's going to keep running it? I know I'm a very good friend of Courtney, who started SeedSpot, and I was there when she started New Global Citizens. And I remember the day that she said, Gil, I'm turning over the reins on New Global Citizen. And I'm like, wow, why? She's because I'm starting SeedSpot. I'm like, cool. And then I remember the day that she said, I'm turning over the reins of SeedSpot because I'm starting another idea. And hopefully you will become that dynamic person that Courtney has been. And if that's what you want to do, awesome. Then you've got opportunities throughout that process. Do you want to retire ever? Some people say, I'm just going to keep doing this until I can't do it anymore. Well, that may be, right? But think about that. Are you going to start another business? Are you going to volunteer? If you want to do that and you want to walk away from the business, how much is that going to cost? And where's that money going to come from is really what you're looking at. And then finally, I think the most important, if I'm trying to give advice today, would be to put together a professional team of people. Now, here's the way I would look at this. You're recruiting a team which is not once and done. What I mean by that is you're not looking for a financial professional, whether that's a financial advisor or financial planner or whatever. You're not looking for someone who can handle a transaction for you. You're looking for someone that you want to be in a relationship with for a long time. So what would you do if you were looking for that? You would start dating. First, you'd see what's out there. You'd start dating, maybe date several people before you finally decide this is the person that I want to be connected with, right? So that's the same thing that I would recommend when you're looking at a financial advisor, when you're looking at a CPA, if you're, again, financial professional, investment broker, et cetera, same idea. Same thing goes with an attorney, right? So to me, you want to have a financial advisor, financial planner, you want to have a tax person, you want to have a legal person, and then if your business gets to the point where it's necessary, you want to have an investment banker or a valuation consultant. But initially, you want to make sure you have those people on your team. If nothing else, think of them this way. Think of them as your mini board of directors. And part of the dating process is asking them, hey, this is my small business. And if I hire you as this person, then this is what I need you for, not just to do my taxes, but I need to be able to say, hey, I need to have a call and my team is going to be together and I want to run these ideas by you so that you all can help me with, hey, these are the things that you should be looking out for or the things that you should pay particular attention to. There's really a team that you're putting together that's going to help you succeed and take some of the concerns that you may have or may develop over time and put them off on someone who does that professionally. So, key questions to ask. Do you have a plan in place to protect yourself in the event that you lost a key employee? Do you have a retirement plan? Are you satisfied with the amount of money that is going into your retirement? If you've got a retirement plan right now, are you putting enough money for you? Are you putting enough money for your employees? Do you want to do something like that? Do you have any kind of a succession plan in the event that you wanted to retire, or in the event that you passed away or a partner passed away, or in the event that they became disabled? Can't imagine how many times we get people referred to us who are saying, hey, there's 3 of us who are partners and one of us wants to retire and we need to know what we should do. And how can we do this? And it's like, holy cow. It's like now we're trying to unring a bell because we're at the 11th hour. It's a lot harder to do something at the 11th hour than it is if we were an hour. So again, something that you want to think about when you put your team together. So with that, I see there's another question in the chat. Got that. It's a comment. Okay. So if you have any questions, please feel free to throw them in the chat. I'll stick around for another couple of minutes. I want to thank you for taking the time to be on the session. I hope you got something out of it. Would love any feedback that you have. You've got my number, my name, and my website, auxiliaassetmanagement.com, and my number 602-667-4700. And I wish you the very best of luck and hope I talk to you sometime real soon. Sharad, I will turn it back over to you, sir.
Perfect. Thank you so much, Mr. Valadez. That was an incredible session. I actually took so much from that myself. And everyone, please take advantage of Mr. Valadez. He is offering his time, his contact information. So if you need any more information on getting connected with him, please let us know. And also, if you have any questions about Startup Spring Training, just email us. And remember that once you've registered for this actual session, you've already received credit. But if you have any questions, I'll be on another 5 minutes. Just let me know. Perfect. I will see you guys again soon. I'll be on for another 5 minutes for any questions.